So gold is hitting all-time highs, and that leaves everyone with one massive question. Are we watching a bubble about to burst, or is this just the start of something way, way bigger? We're going to dive into what BlackRock's Evie Hambro thinks is really going on.
I mean, this is the trillion-dollar question, isn't it? You see a price chart going parabolic like this, and you have to wonder, is it time to take your profits and run, or are we on the ground floor of a major shift?
All right, let's tackle the most obvious question first. When something's at a record high, you have to ask, is it just flat out overpriced?
Well, Evie Hambro points to the companies that actually dig gold out of the ground, and he says their profit margins are the best he has ever seen. Now, your first instinct might be to think, whoa, that sounds like a red flag. Maybe the industry is over-earning and a correction is coming.
But here's the thing. Hambro argues that's way too simplistic. Looking at how much money miners are making only tells you part of the story. To really get a feel for gold's true value, we need to look at it through a completely different lens.
And he calls this the purchasing power test. It's a really smart way of thinking about it. Forget the dollar price for a second. The real question is, what can 1 ounce of gold actually buy you today versus what it could buy in the past?
And this is where it gets really interesting. It turns out an ounce of gold today will buy you more everyday stuff, like a Big Mac, than it used to. But, and this is a huge but, when you look at big-ticket items like a brand new Ford F-150 or property in Manhattan, that same ounce of gold buys you a whole lot less.
So what does that tell us? Well, if gold were in some kind of crazy bubble, its buying power would be going through the roof across the board. The fact that it's actually lost ground against major assets tells Hambro something crucial. By this measure, gold isn't overpriced at all.
Okay, so if it's not a simple bubble, then what in the world is driving this incredible run? This gets us to the absolute core of Hambro's entire argument.
Is it just a bunch of speculation? Or is there a much deeper economic force at play here?
The whole thing really boils down to this one key concept: currency debasement. It's just a fancy term for when paper currencies like the US dollar start to lose their value, usually because governments are just printing more and more of them. And here is where Hambro connects all the dots. He says what we're seeing isn't so much a rush into gold as it is a flight away from paper money. People are getting nervous about the long-term value of their currency, so they're scrambling for something real, something tangible. He calls it the currency-aversion trade.
And that's gold's unique role in the world. It's not just an industrial metal like silver. Right now, it's acting like a monetary asset. It's basically a global savings account for people who want to hedge against the slow-motion decline of paper money. Okay, so if gold is this amazing hedge, you'd probably assume that the companies that mine it are trading at insane valuations, right? Well, this is where the story takes a really unexpected twist. I mean, just look at the performance of some of these mining stocks. They have gone on an absolute tear this year. Some are up more than 100%. So naturally, you'd think they've got to be expensive.
It just seems like common sense. After a run-up like that, these stocks have to be overpriced, right? Well, get ready for this. That's the quote from Hambro. It's a real jaw-dropper. He says flat out that gold mining stocks have never been cheaper than they are today. So how on earth is that possible?
The reason is this huge disconnect you see here. The analysts on Wall Street who value these companies, they're using long-term gold price assumptions in their models that are way, way below where gold is actually trading today. They're modeling for a future where gold is worth maybe $2,800 an ounce. So what that really means is the stock market is betting on a massive price crash for gold. It's already priced in. But here's the question. What if that crash doesn't happen for another year or 2 years? In that case, these companies are going to be generating absolutely enormous amounts of cash that nobody is expecting.
So, for the final piece, let's zoom all the way out. Because Hambro is convinced that what we're seeing right now isn't just another blip on the radar. He thinks it's something much, much bigger.
You see, he doesn't think this is your typical boom-bust market cycle. He believes we are in the middle of a historic, fundamental repricing of what money and assets are actually worth. And this isn't a new development. He says this trend of governments creating more and more currency has been quietly building since the 1950s. It's just that the events of the last few years have thrown gasoline on that fire and sped everything up. And what happens when a long-term trend gets supercharged like that? Well, eventually you hit what he calls a tipping point, a moment where the old rules just don't apply anymore, and the relationship between paper money and real assets changes for good. And so that's the final massive idea he leaves us with. This whole thing hinges on whether we're truly at a tipping point,
Because if Hambro's right about that, then the record high prices we're seeing today, well, they aren't the peak of the mountain. They might just be the base camp. And that leaves you wondering, what happens next?